Folks, can you believe this? I didn't expect to see rocket ships this early in the morning. As Nicki Minaj said, starships are meant to fly. Is that Nicki Minaj? Maybe? I don't know. But they are meant to fly, okay? And look, Crocs here. Crocs? 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 I got a pair. You know I got a pair, folks. Why wouldn't I? Why wouldn't I? Look, this is wild stuff. 10% pre-market. We'll look at the earnings report, see what we can dig down. Obviously, if you look over the last 6 months, great performance year to date. Great performance. 143% growth. Last year, 190% growth. What is going on here? 1,800% growth in the last 5 years. This is a stock that is a monster. It's a monster of a stock. I mean, it's crazy to me how this is possible. Let's look at these earnings, see what we got going on here. Forgot to click on that. Whoa! It's a smasher. I mean, this is what I call an earnings smasher. Non-GAAP EPS, 247, beats by 61 cents. And a GAAP EPS of 242, beats by 56 cents. It's a smasher in terms of the profitability on that standpoint. Now, the revenue line, not bad at all. $625 million, up 73% year over year, beats by $16 million. That's nice. How are Crocs able to do this? Gross margin of 63.9. How is a Well, I know because they charge way too much for them. That's how they're able to have such an incredible margin. But have you ever seen a clothing company with such incredible margin? Look, it's a piece of plastic that they're charging $50 for. It's margin rich, baby. It costs 30 cents to make it. Good golly, good for them. They did issue full year guidance. Revenue growth between 62 and 65%. Wow. That's incredible. Estimated growth is 63%, 63.64. Non-GAAP operating margin approximately 28%. Effective tax rate at 23%, and capital expenditures of $75 million for supply chain investments to support growth. Now, again, I think that's the thing a lot of companies are going to right now, and it's definitely a different way of thinking about it. So instead of relying on their typical transit sources, a lot of these companies are going out and buying their own ships so they can guarantee their products delivered. They're trying to reduce supply chain woes just due to the fact that there's a nightmare right now. So I get it a lot. I mean, it's a great strategy. It takes some investment, but it's obviously in the future even going to be more efficient for them. It's really nice. A little more costly, but more efficient regardless. So full year guidance for next year, which is wild, exceed 20% compared to the 2021 estimated growth of 14.68. Still massive growth. Good golly. Incremental $75 million of air freight compared to 2021. Not bad. I mean, these are great numbers. So let's look at this press release. Look at these freaking things. They're plastic. Now. They're more comfortable than you might imagine. I'll just tell you that right now. I mean, this lady here should be doing Crocs with socks because I think it's the ultimate strategy. Crocs with socks is incredible. Is this thing still trading where it's at? I mean, you got to know. You got to check what the pre-market looks like always, because it changes within an instant. Still 10% up. It's incredible. Let's look at this press release, see what we can find. We could zoom in a little bit for you. I mean, I know if you're like me, you're blind and you need to see. Okay. It's great stuff. It's great stuff. So we saw the revenue line, fantastic. America's up 94.5%. Asia Pacific up 21%. Europe, EMEA segment up 42%. Everyone loves Crocs. They just do. Digital sales growing 69%. Just round it up, folks. We want you to round that number up for several reasons. Representing 36% of revenues was online. So that's a significant marker for this company. Again, you talk about traditional retail, and you don't necessarily expect them to be making 36% of their revenue online. It's a really good avenue for them. So that's why the stock trades higher than a lot of these retailers really have. It's pretty crazy. Double-digit growth expected or experienced it versus prior year, which is nice. I mean, good to see. Operating income more than doubled. Really nice to see that. During the third quarter, production began on bio-based products. We expect to go on sale in 2022, using materials sourced from waste and byproduct from other industries. And by waste, they mean human feces. I'm kidding. They're not going to do that, but it's great for them. Obviously they want to talk about the bioplastics and stuff, whatever. Do you think they're going to be using bioplastics? Who knows? Because the shoe is made of plastic. It really is. I don't know. We'll see. But it's good for them recycling. That is a product by itself that they can charge an extra 50% on guaranteed, and people are still going to buy it because they think they're helping the environment. It's a money-making genius strategy. Genius strategy. I mean, what do you want me to say? What do you want me to say? Very nice stuff. What else can we pinpoint here? Nothing. I mean, nothing crazy here. We saw all this nonsense. We saw the revenues. We saw the revenues by area. We did. Wholesale revenues increased 88%. That's beautiful. It's beautiful. We'll look at the balance sheet and cash flows. You don't need to do that. During this third quarter, they repurchased $150 million in shares, so they still believe this stock's worth investing in right now. Total repurchases to $1 billion spent on this stock. Beautiful stuff. All things considered, you'd like to see it. Full year guidance, we looked at it, and it's pretty exciting. I mean, you like to see that full year guidance. I'd like to see a boost in this 2021 growth estimate, but that's an incredible growth for really a clothing company. It's a shoe company, but I think they call it casual wear company. I don't know. Let's look at the balance sheet, folks. I mean, I've never looked at Crocs before. I don't know what the balance sheet looks like. Holy schmokus. Look at 9 months comparison. Total current assets at 920. What are these in thousands? Okay, 920 million compared to 492 million. So they doubled. They've really just around doubled the total current assets. Big growth in the cash position. Big growth in the accounts receivable. Nice to see. Really growth nearly in every segment. Nice to see it. Total assets in general rose quite a bit as well, 1.7 billion to 1.1 billion. So there's big growth there. A little bit in deferred tax as well, but nothing significant. Mostly in the current asset line is where you see a lot of that growth. Liabilities, total current liabilities, 350 compared to 291. Slight growth there. And total liabilities in general at 1.39 to 820 million dollars. Look, 23-year-old men can voice crack too. Don't make fun of me. Don't use voice shame me. Total stockholder equity rose, not by quite as much as I might have expected, but it looks like they definitely took a lot of long-term debt in on this to raise that cash position and the current assets. Stockholder equity at 352 million compared to 290. Now look at the stock's valuation. You see several stories here. I think this is a stock that's trading very, very high for what it is. We're talking a $9 billion market cap. Quite a bit on a company that looks to revenue this year right around the $2 billion mark. So it's not incredibly expensive, only around 5 times that. But for a clothing company, it is very expensive. Now the growth rates are definitely a lot better than a lot of these companies. And a P ratio of 14 is very, very cheap compared to the general market. So I think this room, based off of this stock based off current valuation, has several things going for it. I think the P/E ratio is going for it in a great way. But again, this is a stock really floating around its 52-week high that is trading high for the industry that it's in. And I hate to say that it's rude. It's rude to say it doesn't deserve higher valuation, but unfortunately, just due to it being kind of a one-trick pony, I hate to say it because it really is. They just sell Crocs, and if the fad were to die, and I don't know necessarily that it will. I mean, I'm not going to say that it will, but if it were, this company would be in rough shape. Does everyone want foam clogs? I don't know if you want. Do you want foam clogs? I mean, I wanted to try them because I need shoes around the house. Look, if you got pets, you need a pair of Crocs or slippers or something because your feet will get disgusting otherwise. Little congested here. What's going on? I get really worked up talking about freaking foam clogs, dude. Yeah, I mean, what do I say? Look, it's trading a little bit high in terms of a market cap for a lot of its fellow competitors, and you're talking about a 20% only growth the next year expected. Could cause the stock to trade a lot cheaper. It's been incredible. If you've been enjoying this ride with Crocs, I really hope you have. Wish I would have invested this thing in 2020, dude. I mean, look at that bump of 1,000% since the dip in 2020. If you invested in this stock, you are feeling great about yourself by then. I hope you have a great day, and I'll be here. I'll be there for you, as they said in Friends.